Hey everybody, morning. Still got more optimistic people than pessimistic, looks like. Kimberly, my favorite subscriber in the chat. I see you, baby. Anyway, welcome to the stream, everybody. Ah, should we call it capital gains and coffee stains, or just the morning monster? I'm your host. This morning, we get to talk about Grandpa Warren, the greatest investor of our time, the Oracle of Omaha, the sage of seas candies, and the man who's been investing longer than pretty much most of us have been alive. It seems that beloved Warren Buffett is up to something, or rather, kind of not up to something. And that not something is investing. That's right, everybody. Berkshire Hathaway might be the eighth wonder of the world. Just that, is currently sitting on a cash pile so massive it would make a dragon blush. I mean, we're talking about a record-breaking $382 billion of cash. Load up your account, right? You got 382,000,000,000,000. You get the point, right? That's just an amazing amount of number. I mean, that's more than the entire GDP of several countries at this point. And I mean, think about it this way. That's enough money to buy every single NFL team, buy the whole NFL. And then you still have enough money to buy a lifetime supply of Dairy Queen Blizzards for everybody in America. And they own Dairy Queen. And so what's the Oracle doing with all this cash? Well, buying up undervalued companies, maybe? Swooping in to save the day like he did during the 2008 financial crisis? Nope. He's buying treasury bills, government bonds, the investment equivalent of putting your money under your mattress. It's kind of like finding out your favorite rock star has given up guitar to take up knitting. I mean, the mainstream media, is it in a tizzy? I mean, what does this mean? They're definitely questioning, why is he sitting on so much cash? Why does he feel like, is it actually a bubble? Is it, is the market about to crash? Is Buffett losing his touch with 2 months to go before retirement out of the chair? I guess the CEO is going to maintain the chair position. I mean, mainstream media acting like a bunch of teenagers just found out their favorite boy band was breaking up. But let's take a deep breath here and look at the possibilities here. Like a savvy investor might. What Buffett is really telling us. Believe it or not, he's not senile, everybody. He's sending a signal, a big, red, flashing neon sign that everything's expensive. He likes to buy value. He does not like to overpay. Everything is expensive. Think about it. For 12 straight quarters now, Berkshire Hathaway has been a net seller of stocks. 12 straight quarters, 3 years. They've been quietly cashing in their chips while everybody else is at the poker table drunk on cheap AI-fueled hype. The last time they made a truly massive acquisition was back in 2016. And let's just say that didn't go very swimmingly well. It was a bit of a learning experience. And if you know Warren Buffett, you know what he always says, right? The first rule of investing: don't lose money. The second rule: don't forget the first rule. that's I was on the show with Jack yesterday in Market Masters, and I said, the first rule of doing the wheel strategy: don't lose money. So be careful out there. So what do we, smarter investors do? If the smartest guy in the room is telling you to sit on the sidelines, funny enough, you know who would be the first trillionaire in the world had you just stuck to his guns? Wouldn't be Elon. It'd be Bill Gates. But Warren Buffett told him to diversify. And, well, he's not the first trillionaire. Maybe the smartest guy in the room doesn't always know. Should we all just go buy a bunker in New Zealand? No, probably not. But it does mean that we should be a lot smarter about where we're putting money, especially if you're not sitting on a large cash pile. These are where the opportunities lie, my friends. While everybody else is chasing the same handful of overvalued tech stocks, got to look for the hidden gems, the forgotten sectors, the companies that make actual money even in the bad times, not just burning through venture capital with a price to earnings ratio of 1,000,000 or infinity in the case that they have no earnings. So let's talk about some ideas. Have you looked at value stocks lately? You know, the boring, unsexy companies that have been left for dead during this growth-obsessed, AI-hyped market. Companies with strong cash flows, strong balance sheets, history of paying dividends. They may not be as exciting as the latest chat app that lets your cereal talk to you with the letters in the soup. I don't know. But these things are a lot less likely to just go poof during a market correction. And how about international markets? The U.S. market? It's been on a tear, but there are other countries out there, and some of them are looking mightily beat down right now. Might be time to dust off your passport, at least your investing passport. Do a little global bargain hunting. And let's not forget about boring old T-bills, the mattress stuffing thing that Buffett's doing. I know. I was just making fun of him, right? But with the interest rates where they are, you can get a fair return, and the risk is relatively low, not zero. It's not a get-rich-quick scheme, but it's a smart way to park your money while you're waiting for the right opportunities to come along. Look, I'm not saying you got to follow Warren Buffett. In fact, those that do follow him and buy things typically get burned a bit. But when a man of his track record and a company of their track record, Berkshire Hathaway, starts to squirrel away cash like a cockroach preparing for nuclear winter, it's probably a good idea to pay attention here. He's not panicking. He's being patient. He's waiting. Patience and discipline is how you win this game. He's waiting for the fat pitch, the easy ball, the one he can hit right over the far fences. And that's exactly what you should be doing if you really are serious about this game. So as you sip your morning Monster or coffee, take a look at your portfolio. Are you truly diversified, or are you heavy into crypto? Are you prepared for a potential downturn? If one comes along, are you ready to take advantage of opportunities that will inevitably show up when the market finally does come back to senses? I mean, all these exponentially high charts are going to come back to reality. Because when the tide goes out, we're all going to see who's been swimming naked. And I, for one, plan on being fully clothed with a pile of cash potentially ready to deploy, buy up all these beautiful undervalued assets as the panickers are selling. Blood in the streets. And that's it for Capital Gains and Coffee Stains opening monologue there. Welcome, everybody, to the show. So, what we got? That's what we got. And jump over here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire personal financial advice, well, there's people for that. Make sure you trust them, though. You can lose money. You can lose money. You definitely could lose money, even following a great financial advisor. You know who cares about your money more than you do? Nobody. And if you don't care about it, it's going to go find somebody else to hang out with. That's the whole thing here. End of the year, Jason. End of the year. He's got 2 months left. 2 months left. But he's not really retired. He's just not going to be the CEO. He's still going to be the chairman of the board. So it's not like he's down and out. He's just, giving up one of his 2 positions, I guess. He's the CEO and chairman of the board. He's just going to give up being the CEO. So give up the day-to-day, maintain the high-level guidance. How's everybody doing? Let's see, we got channel members: Fred, David, Darren, Terry, Hugh, Mad, B, Will, Rob, Scott, Andrew, David, Diane, Rongamer, Ivan, Ringo, Marianne, Serge, Don, Ted, Dan, Fred, Aki, Cliff, Andrew, Chris. Did you make it to Arizona? Andrew, Jeff, Ed. Good to see everybody. If I skipped anybody, I do apologize. General Rush, good to see you, sir. Well, the year's not over yet. We're sitting here, first week of November. We got a few weeks left. We got 1, 2, 3, 4, 5, 6, 7, 8. Basically 8 weeks left. 8 weeks times 7, 56, 57 days. 57 days. Now, granted, 8 weeks, 16 of those days are weekends. So we got 41 days of trading left to do. If you were doing my trade I've been talking about for a couple days now, let's talk about this briefly. $40 a day, average, times 41 days. You could be up $1,600. That ain't chump change. Use this $5,000. That's a 32% return right there over the next 41 trading days. I guess it'd be 40 trading days because we've got Thanksgiving holiday in there too. Christmas, knock one more out, so 39 trading days. Redo the math. 39 times 40. $1,500 divided by 5,000. Yeah, still 31% return. Just making $40 a day. Isn't that crazy? Isn't that crazy when you think about it? If you take $5,000 of risk, make $40 on it every day. That's 31% return in the less than 2 months we got left. I think that kind of number blows my mind a little bit right there. Blows my mind a little bit. So, so the point on this, like, could you do an iron condor? One, there's not much premium available 300 points up. So standard deviations up and down. Like, we don't usually crash up, but standard deviation works up and down. I used to do a similar trade as an iron condor 3 times a week when we had 3 times a week expirations. Let's just talk about it a minute. Could you do an iron condor? The answer is yes. I mean, it is. But if you look at this, and you look at the standard deviations here, 1 standard deviation, by the time you get to 2 standard deviations up, that's cool. The platform's going to hang. There's no premium here. There's nobody really playing up here either. That's not true on the downside. So it's what we call skew. 2 standard deviations right now, there's $4. 2 standard deviations up, there's less than 50 cents. And 3 standard deviations still has tons of premium. So this is one of those where the downside works, but the upside doesn't. For whatever reason, there's more players on the downside. And I mean, you could try for an upside, but you got to be right twice if you do an iron condor. You got to be right to the upside and to the downside. I just play the one side. Now, usually, if I play it in futures, I just play it naked too, because the premium is way better. The what do they call it? The margin required, the bang for your buck, is better. So today we enter the longest government shutdown ever. Right here. I guess as of midnight, we are now at the longest government shutdown ever. I saw lots of political rhetoric that Democrats were just using it to help get Democrats elected, like in New York City, since they control the mainstream media. And now they'll probably reopen the government because we got what we needed out of it. And see what happens there. See what happens there. Lucky me gets to give the government a crap ton of money today. There was an emergency, what do they call it? Emergency punt by the IRS that gave Tennesseans till November 5th to ante up on their 2024 taxes. That day is today. The city of Knoxville, beat the sales tax increase. I was pretty excited about that. The mainstream media here in Knoxville was making it sound like it was a horrible thing that we voted down the sales tax increase. I was like, well, whatever, I guess. And we almost got down to the bubble. Now, I put the bubble on here back over here, to be quite honest with everybody. So it was just a EWAG, right, where I put it. If we look at that. Didn't change the size of that arrow. That pullback was the exact size that I thought it would be, just from a higher level. We kind of gapped through my bubble and went on up, and same exact size pullback. Stuff's not magic. So if we get the rally out of here, we're looking at something up in this neighborhood, maybe up to 7,000. And it could probably, it's likely to take out to the middle of the month. Now, the way things have been going, like, we could just go exponentially higher. If we get up here, though, be very careful. Be very careful. This is getting to be problematic. Without getting a bigger correction, this is a dangerous level up here. Maybe look to save some cash right there. So be careful. Be careful. Be careful. NQ definitely has room to go on up to 27,000. And this may have been what we needed on Russell to be able to push it on up to the target at 2,600. Retesting the breakouts one more time with a higher low, 2,600, and then 2,700 above that. This pattern was activated way back over here in the summer, and highly likely to play out. Oil still being soft. Still sitting here. Can take a trip down to low 50s pretty quickly. What's it gonna be? For those of you like, oh, blah blah blah, love stories. We've been at a correction since back here in March 2022. So coming out of COVID, we ramped oil prices high, but they kind of stopped going higher back here. and they've been bleeding back down. We need a capitulation flush back down to the low 50s. May spark a hot war in the Middle East if we do that, because they need prices back up here in the 60s and 70s at the minimum. And when we finally do get a bounce, our big 618 retest is all the way up here around $100 a barrel. So we'll probably go visit that and then see if this was just a big A wave down, a B wave retrace, and then we get even further down. Look at the market's forward curve on oil. Market's kind of expecting oil to peak somewhere around 2031 and then demand to start dropping again. You can look at this like a demand curve for oil. In the near term, you can see some seasonality. But there you go. And the more interesting place to see seasonality is right here. It's your summer, winter. Summer, winter, summer, winter. Right there. You can also see that in natural gas, the demand. Summer, winter, summer, winter. But natural gas price is expected to go down over time for the most part. Kind of interesting with it sitting right up here at 430. Might go for a new high, new local high, new multi-year high. Gold, still working on this correction. Cool, I love moving fib lines. So we've got this initial move down. And we're just kind of sitting here. Haven't really made any decision. Best decision in the market is no decision. I can make the case for this coming back up to 4,200 and then turning down and coming back down here around 34 to 3,600. Right down in here. Now, the longer this goes on, the higher this will climb, but somewhere in that vicinity right now. And this could take a while. Like, this could take this consolidation over here after we push this out 3 standard deviations. So think about this. We were 3 standard deviations away from the average, my support resistance average down here. 3 standard deviations away. That means 99.7%. And we stayed out there for 3 days. All right. As far as trading days goes, this right here should cover 0.75 of a day in a year. We spent 3 days here, and then we spent another 7 days over here. That's 10 days out. 3 standard deviations away from the average. Well, when we do that, it took 5 months to recharge the market. Right here with 3 days. 7 days out right here. This could be in a consolidation for 12 months. If that was double. And 10 months, 12 months, could be 10 to 15 months before gold runs again. So be careful being too aggressive on gold, up or down. This could just, float along like this for the next year till we catch up over here while it recharges. Bitcoin definitely breached the 100,000 level. Warned for days that we were going to do that. Price action over here told me we were going to do that. There was the test. I'm off of the short for now. I think this can bring a bigger bounce. The level to watch on the bounce is right here. That low. This low right there. If price can get through that, we start tipping the odds. We can get through the roadmap line and actually go higher from here. Now what I want to see is this come up here, do a retrace, hold either the roadmap line or a 618, and turn higher again to be bullish. Now look at this whole big drop we've got so far. This is the this is the key level right here. This 618 right up here, about 115,000. If we can push through that, hold, and go higher, still have a chance at 150K before the end of this run. Is that before the end of the year? I don't know. I don't know. So we didn't hit the ideal support that really supports going much higher. Like that would have been, I would have loved to see this tail come all the way down here, tap it, and then get that. Like that would have gave me warm fuzzy feelings we were going higher. This is still a zone of ambiguity, unfortunately. And based on the votes that y'all did at the beginning, for 37 of you that voted, 59% thought we would hold 100K through the end of the year. 41% said, nah, we're probably going to break it. So be careful out there, everybody. Let's ask another question. Oh, dang, just flew out of my mind. Here you go. Is BKR.B's cash pile a warning sign of the correction to come? Right here. There you go. Ethereum is down here and can very easily extend this down here. We haven't hardly bounced at all on Ethereum. It's a cautionary flag on the play. NKD getting a nice size correction. I like this little tail thing here though. I have to say, I do like that tail. If we can take that higher again, that's a good sign. If we actually turn that green today, that'd be even better sign. Look at this right here. That last correction. This one just slightly smaller. So still in the vicinity of a standard correction here for we make these regular pullbacks. And we make it regular size pullback. And that was a little shallow. That one went a little bigger. And that one's pretty much exactly the standard size. So this has been normal. Pullback, 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 pullback. Probably going to go higher some more. Where does it top out? A couple guesses. We came up just shy of this 53 area. And then 59 to 60 up here is like if we're going to really take this thing crazy higher, run it up in here. We're in a potential topping zone though. So that's the caution on NKD. Global liquidity. It's running higher. So we'll probably see all risk on assets follow suit. Dollar keeps chugging higher. This puts downward pressure on the US markets. The CNN Fear and Greed Index. Let's see. I agree. Don't show my personal information, please. And we're still sitting in extreme fear right here. So Usually the market does not drop out when we're already at extreme fear. Usually we got to be neutral or better for a big correction to take place in the market. Otherwise, there's just too many people are prepared for a big flush out. It just, call me contrarian, but usually the market does whatever the opposite of the main consensus in the market is. Apple, we tag the top here. We need to cool off, retest probably the breakout or the roadmap line or both. This could take several months to do. Amazon did not, like, even though we popped right up here and hit the targets, no enthusiasm for going higher. So this could cool off for a little bit too. Google, 304 is the next upside up there. Meta, and 580 is really the, so we could bounce in here. Like this could be A, B, C done, but that 618 level is right down in here. If we go tag that, just like Bitcoin, it sets us up for the bigger bounce potential that could take us to ridiculous levels. Absolute ridiculous levels up here. Microsoft still being soft, and I still expect to jump down at least into this zone right in here at the roadmap line, if not down to the breakout level. And I've got lots of lines on there. Lots and lots of lines. I want that one back. This would be an A wave down, a B wave retrace, and a C wave down. And if we don't hold that C wave down zone, it's going to take a trip down in here for that bigger 618, just like Meta. And then that sets it up for an even bigger climb out of here. NVIDIA, boy, that took, look how long it took that grinding on that 1272 before we could pop that 1618. I think it needs a bigger correction before it can make higher prices again. Might be wrong. Could just sit here and consolidate again for like 6 more months. And then we go ripping again. Next upside, 300. But the easy thing for it to do is to retrace, build up some energy, and go higher again. Tesla. Got the big shareholder vote coming up tomorrow. See what happens. We're sitting here. This is kind of like a little bit of a diagonal in the price action, but it's kind of coiling up for another big pop. So this kind of same price action in a little bit wider range here. It's a little bit tighter in here. Should still be good for a pop-up in this 500, 550 area. Without a bigger pullback, though, to the roadmap line, I don't know if we can go way higher. Now, if we just extended that watermelon seed squeeze off of this low, we hit it right there. We did the pullback right here. If we just extend that a second time, it should take us right up here from 560, 570. Which is right, you know, my 550 target right in that zone. So see what happens. Netflix pushing on lower. Yeah, we may see this come on down. Retest 1,000. Got the split coming up. Splits have not generally been very strong for the market. We may see a lot more weakness after that split goes through on the 17th. Pretty much everything that's done big splits recently has been absolutely demolished after the split. The only exception to that is NVIDIA. NVIDIA did a big split, and while we did get demolished for a while, we came right back. So, you know, and did a 10 for 1, Did this big correction. Now we're up here. I don't know. Splits aren't working like they should. We're seeing reverse splits and people jump on them like crazy. We're seeing regular splits and people avoid those stocks like crazy. That's counterintuitive to the way it should be working. But hey, trader psychology, baby. SANM, I go pull movers. This one was moving $2 or more up in the pre-market. This list doesn't look correct. Let's refresh, make sure that the list is correct. Make sure the list is correct. Yeah, that's what I thought. Not correct. Light. Nice pop. Come on up. 263. Next upside. This thing's on a tear with no pullback. And we struggled at the 1618 right there. Popped up, tagged the 200%. Retraced a little bit. Now we're going on up for the 272. You know, less than 1% of stuff can just keep running all the way up. But it's possible we go all the way to 8,000. It's possible. I mean, not incredibly unusual. Does happen, but it's very very unlikely. At least that big a move. So the next levels for light, 263. But the other pattern that I particularly like here, after making a 3 to 6 month consolidation, which this did right here, and then it makes a 52-week high, things that do that tend to keep going for 6 to 12 months before they run out of juice again. So if you had jumped on this back here when I talked about that early in the summer, you'd be doing pretty good right now. Lily going for it, baby. Love this. Go, baby, go. Looking forward to tag my target right up here. I need to put me an alert on my target up here. We do have this high to get through at 941. Coming up. It's like 6-7 points away. Get through that. Get through the 970. 1030. Next upside. I am long Lil X right here with the target right up here around 23, 24. See if we can pull that out. Coin. Finally tag the roadmap line. Finally. Freaking finally. I've only been waiting for this for since August. The only problem here is that we did not make a lower low. That leaves open the door for this little flush right here. One more little flush before we can go higher. Leaves the door open. Now, it's possible this was the lowest low. This was the first move up. This was a 3-wave retrace. Possible. To watch and know if this is the case, we need to get back above this high right here and keep going to be able to get to the extension up here. Race, potentially ABC made a bottom. The watch for that to come back up through the 618 and through that gap down. I don't know. Lemonade pushing on out. Next upside 87. Feely at Franklin Electric. I don't know if they're in the data center game, but this doesn't look like they are. First move down. Retest the 618 zone. This can take another trip down. Be careful. NBIX looks like we're coming back up for a potential extension here. That high, this low. 172. ETHU. Oh, ugly. Unity. looks like we still need to hit the roadmap line here. Check on pins. Pins all the way down at 26.40. I might get put those shares on Friday. We'll see. I sold a 27 put. And here we are in the vicinity. Let's see. Check on HIMS today. Getting a little rally. I'd like to see this hold in here. Break back up through the 618 and get some continuation going. So what was the other one I have? Soundhound. This one has earnings coming up tomorrow. Tomorrow. It looks like we're coming back down for the roadmap line test. Can we hold it? If we hold it, that could be what propels us up to the target up here. Estee Lauder coming down for the roadmap line. Ooh, that looks nasty. Don't trade stuff like this. That's working on being a dumpster fire right there. Stuff was set up today. Let's cover these. These are my signature bounce pattern. I use a Python tool to find this list. I don't check them manually until I'm live with you all. There's the potential 100 on the upside. Let's check the numbers. 25, 68. Just an average one. Hertz. Here's the high. Here's the low. There's the entry. Low price stuff. Be careful. This may not work out. Marriott. Ooh, man, look at that chop. It's the algorithm's in it from back here. Don't like the way this has been chopping. Doesn't make it not work. This recent pullback, target 279. The bigger pullback that the algorithm's in is 288 on the upside. Both those could work out. MTG, Magic the Gathering. MGIC Investment Corporation. In it from back here on the algorithm. Came up, missed the target, retraced the roadmap line. Next attempt, 29.42. Otter. Stop is always dollar below the low. Whatever the low is, dollar below is always the stop. Here's this one, 87.94. That looks pretty good right there, that one. That looks pretty good. R&R. That's a nice retrace. Nice expansion, 278 on the upside. This has pretty banging numbers right there. C. That's a picture perfect retrace. I don't know if it's going to go on to the target, but 37.66. Pretty standard numbers here. The profit factor a little light. Skeeter. Tanger Outlets. No, I just gave them some money. Here's the entry, 35.31. SPG. Here's the potential, 190. Looks like these are rallying Tanger and Skeet. Tanger and Simon Property Group. Kind of rallying a little bit in anticipation of good holiday season. 190 on that target. Yeah, pretty fair numbers down here. Travelers. Got the high, we got the low, we got the entry, and we got the target at 293 for Travelers. Fair numbers here too. Pretty standard. And UNM. Here's the high, here's the low, there's the entry, 8081 target, VEL, and 1958 right there. Look for that to pop up there. All right, everybody. That's the list. Expectation for today. Well, if we get above this 15-minute, back test it, game on for that bigger 7,000 area target up there. That's what I'm watching. Have a great day. I'll be on Market Masters 11:30, and we'll see you later. Bye for now.